Hey, hello guys, welcome back. We are here with interesting week. First of all, we start out with take you through what exactly happened. Okay. First of all, we had the Empire State Manufacturing, which came out a little positive expected, where we sat at 4.6, and that is why we had a surprising move on the dollar index towards the upside, and then eventually we continued the dollar momentum towards the downside. So it was expected that gold and dollar have that correlation coming of a divergence. Whenever gold goes up, dollar eventually goes down. And looking at the bull market of gold right now, we can expect that the market should continue pushing and dollar and continue pushing down for the time being. Okay, this gives us more and more confidence. And plus, we had the Fed chair speech as well, where there was a lot of optimism and a confirmation giving us on the CME Fed tool that there will not be a rate hike for this month, or for the next month, which is on 1st of November. There's a 99.9%. Can you imagine a 99.9% chance that there would not be a rate hike because of the uncertainty going on around in the world, because the whole war situation going on around and everyone speculating and understanding what will happen. We know that during war times, gold has always been a major catalyst play and major play for its bulls. We've seen it a lot of times. We've seen it during Ukraine, Russia. We've seen it during the 2022 pandemic, so on and so forth. So these are, and of course we saw a lot of reversal during the Fed pivot. We saw again Ukraine, Russia. We saw 2022 as well. 2022 uncertainty of COVID. And then later on, we had another dump over here where we tapped out of liquidity and a pivot was coming into play. But with that being said, Ukraine-Russia war also came into place and then shot up gold almost towards 2040. And now another continuing for gold to continue pushing up above 2100 or way above that as well. Okay, so that's my optimism for gold as a whole and gold in terms of a long-term time frame. So you can see that gold has moved so quickly, so fast towards a majority of its upside, right? So this is almost 1,000 pips over here when we're talking in about gold, and another 900 pips on gold in one week, 900 in 2 weeks, almost over 2,000 pips. So that shows the amount of bullishness, that shows the amount of pressure gold is having pump the markets, whereas dollar is staying a little stagnant over here, where you can see there is some sort of uncertainty and definitely an expectation for the dollar to continue pushing down. As you can see over here, the market structures have been broken, a simple retracement has been taken, consolidation and a continuation push towards the upside, towards the downside should be seen anytime soon. When we're looking at USD JPY, we understand the similar things over here, where intervention had been taken place by Japanese. Even another interesting thing is, if we check INR as well, USD INR, there was an intervention given in, or confirmation coming in just during this whole war situation. There was a whole news that there is a huge intervention by RBI in order to stabilize. Okay, so which is why governments are coming in. The dollar is pushing towards such a heightened extent that the dollar needs to cool off at some. Okay, same thing going on. If we're looking at the most optimistic data over here, our inflation rate, again we are seeing 3.7 and a clear indication of no rate hike. Okay, no rate hike at 5.5. We're going to stay stagnant at 5.5, but 13th of December is where I really optimistically think that this data could completely change from 5.5 to 5.75. But if at all we're comfortable over here, the job market is also looking really good. I don't think there should be any sort of rate hike as of right now, because jobless claims are coming down. The unemployment rates are also coming down. If you see the whole week, the unemployment claims are also, positive. Unemployment rate is also coming down, which is a positive sign. But this needs to continue happening so that inflation keeps on deepening down. Now, if you have seen the whole Fed speech, Fed Powell clearly has indicated that there has been increased amount of purchase in the market, in the consumer market, and the whole consumer sentiment right now is pretty positive, despite the credit card rates being, hitting at an all-time high. A credit card default by consumers hitting at an all-time high, which gives you more and more, confusion whether or not the markets are looking optimistic or not. Which is why you can see how the equities market are just dumping there and there. You saw Tesla dumping around 10% one day. You're seeing the Dow Jones, Nasdaq, S&P 5, everything is just dumping, having a free fall right over here towards the downside. Just a small cool off over here on Bank Nifty, but I think eventually this will also, show you a pretty ruthless dump over here as well, right? So if we check the weekly high and the weekly low, you can see that we're cutting down on the weekly low again and again and again and again. And same thing on the daily as well. We're always very close towards just breaking an important support, which I think it's not going to be so important anymore as we bounce back, take up some more liquidity, bounce back towards upside, take up some more liquidity, and a push towards the downside, which would be very easy for the markets to optimize it and for the markets to definitely see it, right? So we are in a huge range over here on Bank Nifty, but if at all we can breach down over here and then get back into the range, then it will be to watch out for Bank Nifty, all the banks as well. Okay, over leverage has been happening on banks for a very long time, but that's something that we will have to keep on waiting for, that whether the banks take a responsibility for it or not. Okay, you check it out over here. Higher yields take some pressure off as Fed to raise rates, but if you check the bond yield market as well, it's going to just do over here, almost reach very good high, and at the same time at the 30-year yield bond also hitting at almost hitting 5.15 or 5.14 as say, giving a lot of concern to the companies that despite these bond yields being so high and companies being liable to pay these coupon rates at such a premium price, will the companies survive, or will eventually they file for bankruptcy because they have issued so much of debt to these bonds, and eventually they would have to pay. The US government has definitely shown some steps of liquidation where they have given a buffer amount where the banks can survive, where they can take amount of loans at a very low interest rate, so which we have talked about it, where JP Morgan and Bank of America had taken huge amounts of loan during, if I'm not wrong, during the Ukraine, Russia, and during the SVB fall, basically. That time where almost $100 billion dollars worth of loan was taken by these banks in order to be liquidated and definitely play in the market. So that these measures are being taken by the Fed and free money is being distributed over here, but at what cost? Okay, but at what cost? As Fed Powell said that despite the debt ceiling, hitting at an all-time high and interest rates worth of $1 billion per day, they think that they are very well positioned, as they think the resources that they can sell out will all cover out these interest and definitely the principal, which I hardly feel if there is any situation as such, any emergency situation as such, they always move on to the IMF and ask for more money, which again is Bank BIS, which is the Bank of International Settlements, prints more money and eventually have whole economy getting liquidated, or you would have some sort of crash. But I feel this is a good positioning of a very good bull. Okay, for the equities, I think this is a very good position for a bull market. Not this year, but definitely in the coming 2 to 5 years, this would be a ruthless market. that would be positioned. In order to liquidate these positions, it's necessary for the markets to come down, tap onto these areas of liquidity, and then just see an unlimited rally to upside, where you will just watch and just be waiting for when do I enter, where the time to enter is exactly now. When the markets are falling, when the markets are getting discounted, it is the time to enter amazing sectors such as renewable sectors, sustainable energy sectors are going to be the game changers for the next 2 to 3 years at least. Okay, where almost $1 trillion worth of cash inflow has been seen. I've seen that in reports and everything, where big banks are talking about $1 trillion worth of foundation money, you can say contributional money, so on and so forth, is being pumped into ESG, which is environmental, social, and ESG sector itself as a whole, which is sustainability, right? We're moving towards a sustainability sector where I think more focus should be put on renewable, sustainable energy. I know it's completely I feel that it's utter bullshit where you talk about climate change, but resources are getting limited and the demand for these resources are getting at skyrocket price, which is not good for business. Because if business has to purchase these raw materials, they would have to put it at the end consumer, which eventually the end consumer will find some sort of a substitute, and that price will deplete, or you could just call it a crash itself. So, that whole circle plays out really well when it comes to, the circle of pricing, the circle of, you could say, the circle of methodology, so on and so forth. Okay, so it's important that you watch out for these. Well, now on Nasdaq and on Dow Jones, it's simple that I'm keeping a completely bearish view. Same thing on Bank Nifty, a complete bearish view. Expectation that the market should continue falling below these levels. If at all we create some sort of support and we close above the day high, so let's say we close on Monday above the day high, I would expect the market to pump up at least towards this new supply, and then wait for some sort of a confirmation of a resistance, of a 2-day resistance, and then continuous push towards the downside, which would be just a amazing dump towards the downside, I feel. Okay, I've seen this happen so many times where the market bounces off at a very important level, people start heavily buying over here, thinking that this is support, goes up a little bit, and then just you will see one bloodbath and you're like, oh shit, what just happened, right? So there's a very high possibility of it happening this week, if we don't have any holidays in markets. But that's what I think. Gold again. I've been buy on gold since a very long time, since it breached 1900. I've been buys on gold. So these accumulations should have been done at these levels, right? Average down accumulation should have been done at these levels. I agree that if it would have come even further more down, if it would have broken 1800, it would have been a very bad sign. But eventually it didn't, and then a continuous push towards the upside came, which we are seeing, which I think this again will create a huge problem for everyone. For the whole commodity cycle, create a huge problem. Oil going back at 88 over here again, almost reaching 93, giving us stabilization coming in from the Saudi Arabia as well. If Saudi Arabia, is a bit lenient and I would say like neutralize the whole oil supply, then it would be great for oil again stabilize and come down, right? If we check orange, right? Orange juice is something I don't know. I've been watching orange juice since this week for absolutely personal reasons. It wasn't something that I really wanted to see, but you can see the orange juice has moved really high from having a weekly movement of almost let me check how many percent. Almost a weekly 5%, which is high because you get extra leverage on orange juice, and the yearly percentage of, I think if I'm not wrong, almost 250%, right? If you check it out over here, of almost 300%, which is something a lot of people are not really paying attention to over here. But you can see that orange juice has just moved extremely in a bullish manner. in a constructive bullish manner. It's not something that it's moving in a one line. It's moving in a constructive manner. This is what is called a constructive bull market, where it's taking its pause and just pushing and pushing. Orange juice, I think it's absolutely an amazing commodity right now when I'm looking at it. But right now, I guess it's just late. You guys will have to wait for a right pricing in model and then get in at orange juice. Have the sources to at orange. Right, so I think it's absolutely crazy how we see these kind of commodities moving. Aluminium, while so out. Aluminium has, again, just as shit as possible. I did not expect it to be that good as well. Copper as well, copper as well, just like this. Silver has been absolute. That silver has just moved absolute. It's the same structure happening on each of the commodity cycle with silver and gold, and if I'm not wrong, with platinum as well. Platinum had more of a down, not that big of a push towards the upside. Problem. Gold and silver looking untouchable to me. It's looking like they're on a free ride right now, and nobody can just stop them by any chance. Okay, I agree. We have reached a very important level of supply over here, where there is a possibility of a downward push coming down towards the near support, then a continuous towards the upside. So I think this rally should be taken on to a small pause right now. Okay, I don't think it's gonna dump, but I think a small pause where a good amount of support could be seen, because we have just breached out a very important supply where a lot of sellers could come in, and a small support, how this whole area played out, a small support to be created over here, then a continuous push towards. I think we're reaching 2000 levels, 2020 levels way before the target. My target was probably during December. We're reaching this way before this. This just gives you so much of expectation that there is more movement in the market happening. There's a huge possibility that after this whole bull movement, there could be an easy dump of commodities coming into place, with US failing to get its promises, and of course US again asking for $100 billion worth of loan, because they're providing aid to Ukraine, and they're providing aid to Israel. They're providing aid towards the borders, and they themselves need so many resources. But it's just absolutely funny when you look at it this way, that the amount of debt that has been collected right now, it's a huge money flow, where money is just getting transferred from one person to another, and it's just vanishing out of thin air, right? Where the value of money is definitely rising, but at the same time the whole logic of money is decreasing so badly. So that's something that I'll be watching out for. But I hope you guys enjoyed this. I hope you guys got some information over here. Till then, see you guys. Cheers and goodbye.